Hey traders, Nick Shaheen here looking at Google. The ticker GOOGL, not Goog. It has two tickers. You combine them for the whole stock price. People forget that. Anyway, literally I just got the question, is it a good time to buy Google now? Or is Google now a good buy? I don't know. It depends on your time frame. I can answer it differently. It's definitely better than chasing this rally. It's now about, what is that, 12% lower. More importantly, it's falling into a prior pivot. So it's support zone. Look at this, where it is right now. That's not a coincidence. So it's falling back into the February high. Should Google be higher than when it was in February? Not in my opinion. But if the market rallies based on this new tech rally, fine, Google could chase, but I would rather be chasing Facebook, for example, which is eating Google's lunch and Google doesn't know it. I'm afraid for Google fundamentally long term. So I wouldn't want to chase it. It wouldn't be my choice, but I can't tell you, no, it's not a good time. Now, it is testing the resolve of the bulls. So if I was to wait to buy shares or calls, I would rather buy them down here. So I could sell a put spread down here rather than chase the upside. That's my personal preference. I don't like to chase Google because the management has shown us nothing. In fact, they're like going out of their way to mess up, kind of. They had the lead in the self-driving cars. You don't hear anything about it. They had the lead in robotics. They sold that division with that dog that you could kick and it finds its balance. They had Google Glasses when nobody else did, and they gave up on it because people complained about them. For privacy reasons, and I bet you anything that's going to be the going thing forward. Wearables, I mean, really? Come on. Anyway, so I don't like it fundamentally. I definitely like it better than up here. Buying the dip works, depends on how you do it. This was the base for the whole rally, so it makes sense they could retest the whole base. This also is coincidentally the point of control, but it's arguably several of them, like one here, one here, one here. The whole zone is supportive, so it shouldn't crash, especially that we just saw the COVID crash. Buy the dip works. Where to buy the dip depends on the personal preference. So fundamentally, it's not dirt cheap. In fact, it's probably relatively expensive. 35 PE. This is trailing 12 months, so it's actual PE. There's no forecasting. I hate when they start forecasting. Price to sales is 6.8, which is Amazon-ish, a little bit more. So this is not bad. Compared to Apple, this is cheaper from those two perspectives relative to itself. Google always ran higher metrics than Apple. Apple now suddenly is double what it used to be. I know the argument, different company, but it's not that different from 2 months ago. And the valuation is very different from 2 months ago. Anyway, this is a Google talk. And it is way better. I can't tell you don't buy the dip because the buyer should step up. Now, if the markets crash, what's Google going to do? Crash. So here's the scenario of a crash. When you don't see it coming, oh, okay, so I started talking about it. Well, let's start it fresh. All right. Oh, first, let's see my lines. So I said there was a tight zone, either a breakdown or a breakout. They started to break down and then market rallied. They broke out and exceeded my expectations. But the point, it's right back into my zone. So looks like nothing happened. So if you were bullish back here, to me, I'm not that bullish. Let's put it this way. Now let's talk Turkey. So how can a debacle happen? So when I'm selling puts and put spreads, I want to know what's going to screw me. So this is a neckline that is very prevalent, but it's also support. I can draw it this way, that way. So what if they bounce? I know this is going to be resistance. This whole thing was a major fail. Everybody, 5% one day, they're going to think twice about chasing higher. What if we do this for whatever reason? Politicians don't come with agreement, blah, 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 blah. Headlines don't matter, right? So what if that happens? Or even worse down here, and this is lost. Or even worse down here. So I have 3 necklines I can play around with. 1, 2, 3. Depends on where I want to place it. What if any of these or all of these happen? Now suddenly they're talking head and shoulders, inverse cup and hand, or whatever it is, of a neckline lost. So from here, the drop can be down to here. I'm going to eyeball it. It's a zone because I have 3 peaks, 3 lines. The breakdown starts from a higher zone. So if this was the entire risk, in theory, this is the entire potential risk, but I have 3 different versions of it. So 1350, 13 or 1250 would be a good place to buy the dip. So is it a good entry point? It's way better than 3 days ago. It's not as good as it could be. 1350 would be a really good buy the dip moment. So here's what I'm going to tell you what I'm going to do. I'm going to buy the dip one here. And then I will put another buy the dip with an exclamation point down here because I do have a sharp turning point. This looks funny. Alert. Okay, buy the dip with an exclamation point. 2. So now I know I don't have to watch the stock, and this one should be a buy the dip or add. Let's put add. So if I don't buy the dip here and I sell put spreads here, or if I don't buy the dip here, I get an alert, I start looking, depends on how the macro is going. Maybe I decide to punt, I'll punt, and if this gets here, I'll look at the macro, how's sentiment, and then I'll evaluate here, I'll go long regardless. So this is what I would do with the Goog L.